5 things to know before the stock market opens. US stock futures are mostly up ahead of earnings reports and retail sales numbers. Taiwan Semiconductor Manufacturing Co. TSMC shares are jumping after reporting better than expected profits. UnitedHealth Group UNH shares are falling because their results missed estimates. Bank of America BAC is posting strong results like other financial companies, and retail sales growth is expected to slow down in December. Here's what to watch for today, and some suggestions on how to react. Stock futures are mostly higher, with Nasdaq futures up 0.4% after a big jump yesterday. The S&P 500 is ticking up, while the Dow Jones is a little lower. Investors are waiting for more earnings reports and retail sales data later today. Bitcoin B2C USD is down 1%, trading around $99,000, and the yield on 10-year US Treasury bonds is slightly higher. Gold prices are rising, but oil prices are falling. If you're holding stocks in tech or retail, this could be a good time to stay on top of earnings reports. Market swings are expected, so consider adjusting your portfolio to stay balanced. If you're unsure, a diversified approach mixing stocks and bonds might help weather short-term volatility. Shares of Taiwan Semiconductor Manufacturing Co. TSM are up 4% in Premarket trading after the company reported better than expected profits for the last quarter and an optimistic forecast for demand from artificial intelligence AI. The chip maker posted a profit of $11.37 billion, a 57% increase from last year, which was higher than what analysts expected. Revenue for 2024 also jumped by 34%. If you're looking for growth stocks, TSMC could be one to watch, especially with their strong performance in AI. However, remember that tech stocks can be volatile, so make sure you're comfortable with the risk before jumping in. UnitedHealth Group UNH shares are down about 3% after the health insurance company reported results that didn't meet analysts' expectations. While revenue grew 7% to $100.8 billion, it was still below expectations. Earnings of $5.54 billion, or $5.98 per share, also missed forecasts. However, the company's adjusted earnings per share EPS of $6.81 were better than expected, and they confirmed their outlook for 2025. If you're invested in health insurance stocks, this could be a good time to review your position. Even though UnitedHealth reaffirmed its 2025 outlook, missing expectations can signal challenges ahead. If you're risk-averse, consider trimming your exposure or diversifying into other sectors. Bank of America BAC posted solid earnings. Similar to other financial companies, the bank reported $6.67 billion in profit and $25.35 billion in revenue, both higher than expected. Its net interest income came in at $14.36 billion, also above forecasts, despite a 45% rise in its stock over the past year. Bank of America shares dipped slightly in Premarket trading, who were initially rising on the good news. If you're holding Bank of America or other bank stocks, their solid earnings suggest they're weathering the economic environment well. However, if you notice a dip after a good earnings report, consider whether it's a good buying opportunity or a sign that the stock may be peaking in the short term. Investors will be watching for December's retail sales report at 8:30 a.m. ET. Economists expect a 0.5% increase in sales, slowing from the 0.7% rise seen in November. Retail sales have exceeded expectations for the past 6 months. Slower retail sales growth may indicate a cooling economy or shifting consumer habits. If you're investing in retail stocks, be prepared for potential volatility. Diversifying into sectors like healthcare or tech balance your risk if retail sales show signs of slowing down. With earnings reports coming in strong for banks and tech, it's a good time to watch your portfolio closely. If you're seeing gains, it might be smart to lock in profits, especially in tech stocks, which can be volatile. On the other hand, if you're looking for opportunities, consider buying stocks that have dropped due to missed earnings, like UnitedHealth. As long as you believe their long-term outlook is still strong, stay informed and adjust your strategy based on both short-term market movements and long-term trends. And remember, diversifying your investments can help manage risk, especially in uncertain times.